Welcome to Crypto Corner. I'm Jenny Horne. It's time to focus on the crypto markets and get the latest insights into that space. Joining us now is Adam Lynch, a director at the Schwab Center for Research here to discuss really what we're seeing right now in the overall crypto space. And of course, last time I spoke with Nate Peterson about that 200-day simple moving average for Bitcoin, hovering right now around 85,000. What is the chart showing you?
Yeah, that's a great question, Jenny. And I almost hesitate to say it, but I think it's strength. The price has broke through the 100-day, the 200-day moving averages, but it's found support here at the 50-day level, which is right around $85,000. So I think it's pretty encouraging that over the last month or so, if we go back to February 28, the S&P 500 is down 10% between then and now. Bitcoin's flat. So I think it's been pretty encouraging to see that sort of strength. I think we're still a ways away from the whole digital gold narrative coming true. But over the last couple of weeks, we've been given some things to think about. If you think about overpriced, overbought assets, a lot of times they underperform on good news, and oversold assets will outperform on bad news. And so I'm thinking that Bitcoin might even be at or near a bottom at this point, because it has been holding up pretty well in the face of all of this, not necessarily bad news, but really volatile times. So one of the things we always ask our clients at our events is, where is the next 10% move? Is it up or is it down? And oftentimes that's ranged, around 20% of people will say down. Now it's more like 50-50, but I'd be really curious to ask that audience what they expect for Bitcoin, if its next move is 10% up or next move is 10% down. I think that would be a pretty 50-50 split right now as well.
Okay, and I'm so glad you mentioned, like technically speaking, definitely seeing some resiliency. Just briefly dipping below its 200-day moving average, but considering it's been able to maintain above that level and in spite of this volatile market, hang on quite well. This is now a tone I've heard echoed by so many different guests I've talked to. So I think encouraging, we're hearing this more and more. But then we look at the ETF space, which is another major component, of course, of Bitcoin right now. What are the key differences now between spot Bitcoin ETFs and then Bitcoin future ETFs?
Yeah, that's a very important question for our clients. And I think it's important to rewind the clock a little bit and give everybody a quick history lesson. But back in 2021, the SEC allowed ETFs to hold these exchange-traded Bitcoin futures. And I think the thought was they're on regulated exchanges, they've got consistently produced prices, fairly safe spot. The ProShares Bitcoin ETF was the first of those. And then in January of 2024, after the SEC lost a court case, they actually were kind of forced to allow these spot Bitcoin ETFs. The biggest difference between the two products is what they actually hold. So the spot-based ETFs, they tend to mimic the price of Bitcoin a lot better because they or a third-party holding company holds actual Bitcoin. On the other hand, the Bitcoin futures invest in the financial futures of the underlying asset, Bitcoin. And that can cause some issues. Because of that structure, and reestablishing those futures positions as your contract expires, there's costs associated with that. Roll yield. There's something else in the futures and options market called contango. That's a situation where the market, the forward price of the futures contract, is more expensive than the spot price today. So when you reestablish that position, you're essentially selling low and buying high. So on every one of those rebalances, you're essentially going to lose money if the market is in that contango, which is what we tend to see with Bitcoin. Now, those costs, the roll yield, the costs of reestablishing these positions, can eat into performance, and a lot more, I think, than people really expect. You can go back, and I'm not going to mention the funds, but you can go back to January of 2024 and find a Bitcoin futures ETF that's down 20% between then and now. You can also find a spot Bitcoin ETF that's up 70% over that time period. So I think it's very important to understand what you're buying. Take a look at the expense ratios. A lot of times these funds may have higher than average, and just know what you're getting into before you establish that position.
Okay, and continuing to talk about some of these funds, because I think such an important topic, I agree. XXRP launched this month. So really, what does this mean for the XRP token as well as then the other cryptocurrencies?
Yeah, that's going to be an interesting one to watch, I think. So this obviously just happened over the last week or so, but back in March was when President Trump announced the details of, a plan for this digital asset strategic reserve. And in that initial post, he mentioned XRP, Ripple, SOL, Solana, ADA, Cardano, as well as Bitcoin and Ether. So what happened was, yeah, there was additional attention in some of those currencies, and that XXRP, I think it's Tecurium 2x long daily ETF. So not only is this a Bitcoin ETF, but it's a levered crypto ETF. So that leverage allows investors to try and double their exposure and essentially get 2x the price move of XRP each day. What does that mean for the currency? I think one key thing is just the increased attention, right? That will cause the currency to become more popular. It's already one of the top 5 in terms of market cap, but could, more funds being launched that manage this, could it cause it to catch Ether? Potentially. Another thing that I think is important is that when you have increased activity or increased attention in a currency, there could be additional volatility. So that, I think, could lead to products like this making, having a great opportunity to take advantage of that increased volatility when they're using that leverage. I think that when you look at the actual company that produces this fund and read their documentation, they describe it as something to kind of use in a short term when you have high conviction on the security. So I don't think there's going to be many buy and hold investors in that ETF, but it could be an interesting thing to try and take advantage of short price moves. I think the bigger question here, though, is what it means for these other currencies. And we just think about where this industry has came in the last couple of years, right? A few years ago, there were no crypto ETFs. Now there's nearly 100 of them. So could Solana, could ADA, Cardano, could those be some of the next ETFs that get launched? Potentially. There's all of these products out there with Bitcoin leveraged, right? 3x, 2x short. We've got ultra short, income covered call strategies, all types of things built around these cryptocurrencies. And I could see them being more with more currencies, right? Just adding additional products and additional ways to try and capture this return. And given today's crypto-friendly environment, I expect to see a lot of growth in this place over the next couple of years.
Yeah, and I couldn't agree more, as we do have an administration also being seen as more of a friend to the crypto space. So great place to leave it with some enthusiasm today, which we definitely needed with the overall markets, but we so appreciate it, Adam Lynch. And that'll do it for this week's episode of Crypto Corner. For more on all things crypto, be sure to like and subscribe to Schwab Network's YouTube channel. I'm Jenny Horne. Thanks for watching.